now start with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. On the technicals, we have Vaishali Parekh joining in with us, while from the research team, we have Harsh joining in with us, as well as Lisa as well. Good afternoon to both of you all as well. And Harsh, let's just come to you. NBFCs, you did highlight a bit on it. Finance bill, I believe, is the word coming in for these stocks being in focus.
Well, yes, and you can see cuts on the NBFC stocks largely because of the risk that the cost of funds may expand and may go up. And you can see LIC Housing Finance down 3.4%, Bajaj Finance down 2.2%. Mind you, both of these have within their liability basket a 50% exposure to NCDs, and that spills over to debt mutual funds as well. So debt mutual funds will subscribe to NCDs and therefore they will now need to find alternatives to raise money, and that's probably why both these stocks are in the red as we speak.
Okay, watch out for those candidates in today's trading session. But let's move on, Vaishali, discuss the first stock on your radar, metals, and it's JSPL that you've identified. Clearly seem to be coming back into flavor. What's your outlook on the charts?
Hi, good afternoon, all of you. Actually, metal sector on the whole has witnessed new round of selling. So I have a weak bias on Jindal Steel and Power. Well, it has corrected substantially, but I see the stock further sliding towards 520 levels. So that would be my sell strategy.
Okay, keeping an eye on Jindal Steel and those levels over there. But, let's just talk one more space that is in focus because of the finance bill, and that is the AMC stocks. Now, whether you look at HDFC, AMC, UTI, AMC, all these are under pressure because a bit of a negative coming in for these stocks as the attractiveness for the tax arbitrage on the debt investment goes away because of the debt mutual fund, the announcement that is made on that, and of the liquidity mutual funds, no benefit since there were any short-term, they were short-term in nature as well. Now, overall contributions, revenue contribution of the non-liquid debt products is 11 to 14%, and moderate to low impact since the revenue to and profitability of the debt is there. So yes, keeping an eye on this one. This move is mainly coming from the finance bill is to remove the tax advantages enjoyed by debt mutual funds over the bank fixed deposits as well, and that is why that was passed in the finance bill for in terms of the taxes coming in for debt mutual funds. So on the back of that, we're keeping an eye out on AMCs.
All right, that's the view coming in, and you can clearly see that impact play out on some of those stocks. Let's move on then to stock number 4. It's the entire IT basket that's in the spotlight, and that's largely on the back of what Accenture had to deliver. So by and large, it's not bad, but the outlook has been moderated on expected lines. They said that there are 19,000 job cuts, and that really seems to be worrying the street a bit. Analysts say that they will give the company a little bit more agility to protect their margins, and the job cuts were expected, but the quantum of the job cuts, that's been a bit startling. So you have revenues at about $15.8 billion. That's up 5% in dollar terms. The Q2 growth guidance was about 6 to 10% given by the company in terms of their outlook. Operating margins at about 12.3% versus about 13.7% YOY. They've also gone ahead and said that the top range has been trimmed largely on the back of macro uncertainties to about 8 to 10% versus 8 to 11% earlier. Operating margin for FY23 seen at 14.1%. EPS will be in the range of $10.8 to about $11.06. And analysts believe that the guidance is a bit back-ended as the Q3 guidance was muted. They've also went ahead and said in their conference call that the next quarter bookings will be slightly lower. Deal conversion rate may also slow down in certain vehicles, and the demand metrics, though, that continues to be the same with growth led in the US.
Okay, Vaishali, coming to you. GE Shipping is the stock that you've picked out. What an up move it's seen in the last 1 year, 2 years, 6 months, whatever you look at it. How much more upside now?
So I would say yes, of course, in a market like this, we are looking at stocks which have got a good trend set in. So GE Shipping, I like one of these stocks. This is the one which a very good trend. So I would say it's a buy on my side with a stop loss of 600 and look for a target of 660 to 680.
60 to 680, that's what you should watch out for, the stock up and away. Meantime, Campus Active as well is seeing a huge reaction on the stock price. Lisa, what are the details of the block?
Where it slumped nearly 8% in today's trade, and that was amidst the reports that American alternative asset management firm, that is TPG Global, it sold around 7.6% stake in the company via a block deal. Well, the floor price for the block deal was set at around 345 per share, which was a nearly 7% discount to the previous closing price. JM Financial is the sole book runner manager of the deal as per the reports. Well, going back in September 2017, TPG Group, which is the growth equity platform of TPG Global, and the family, the promoters of Havells Group, they had acquired around 20% stake in Campus Activewear, valuing the company at around 1,500 crore. So this company, which was listed way back in May 2022, it just saw a 3% gain since then, and in the last 6 months it saw a 40% erosion in its wealth, and on YTD basis also the stock is down like around 17%, but around 5 brokerages, they are quite positive on this stock, and they have given a 12-month target price of around 445 on the stock.
Vaishali, coming to you again, and Welspun Corp, how are you looking at the charts for this one? Because last 6 months we have seen a correction, so is it the right time to buy this then?
I would definitely think so, because as I said, that this particular stock also long-term trend is still intact, and right now we are seeing that there is a good base formed at 190 levels, and from there on we are seeing some pickup. So I would say that it has a very favorable risk reward with a stop loss of 190. One can buy the stock for a target of 220, 230 to start with.
All right, so that's the view coming in on Welspun Corp. Tell you what, we'll just take a very short break. The countdown continues on Market Fatafat. Come right back.